Hello, everybody. We're back. It's time. It's Wednesday, 1 p.m. Mr. Radigan, truth or skepticism, as we do every week, and we'll do for every week.
Who are you picking for the Bears? Who are you picking?
For the Bears? You mean with the number one draft pick? Well, the consensus in Chicago is that they're going to trade trade the pick because they already have their quarterback, and the other players will all be kind of there still. But if they stick with it, they'll take Will Anderson from Alabama. He's an edge rusher. He's a stud.
And which do you recommend?
What do you mean, which do I recommend?
You trade the pick or you make the pick?
I would probably make the pick because we need superstars, we need lots of things, but we need a stud.
So you want to pull a big shining star off the top of the stack?
Yeah.
Uh-huh.
Yeah.
And why do you think having a big shiny star is the answer to the question?
I mean, sports is all about having the right superstars in the right places, superstars change. Outcomes.
Turns losses into wins. Superstars turn losses into wins.
Yeah. They change franchises.
And you would say that's based on anecdotal evidence because of your experience with the Bulls and Michael Jordan, I presume?
It's based on lots of sports watching for basically my entire life.
Okay. That makes you believe that a superstar is a very, maybe, is it a critical, is it necessary piece, or is it only valuable?
It's incredibly rare that a team will win a title in any sport without a superstar.
What about the system that they were running at the Spurs for all those years?
Don't Jerry Krause me, okay? It's organizations win championships.
Sometimes people have a system.
Yeah, don't ever Jerry Krause me, because Jerry Krause, organizations win championships, not players. They don't win a single championship without Michael. So I don't want to hear that. I hated that line when I heard it the first time, and I still hate it.
Okay. And that's fine. How often do you believe a number one pick ever actually, the same way, sort of like, we'll call it an interpretation of the old Sports Illustrated cover syndrome. Yeah. And all the legendary stories, Lawrence Taylor was out of Alabama, this and Treacle, Joe Montana was a backup, Tom Brady, none of these people are number ones.
I mean, sometimes you don't, but I mean, look at the...
What makes you think the number one is so valuable?
Well, look at the playoffs right now. Trevor Lawrence was the number one pick, and he's going to the next round. Joe Burrow was the number one pick. He's going to the next round. Josh Allen, was he the number 2 pick or number 3 pick? He's going to the next round. When you look around the league right now, Patrick Mahomes, he was, in the top 7 or whatever. He was right there. These are all the quarterbacks that are in the playoffs are basically, number 1 picks.
But you don't need a quarterback.
No, you need a quarterback. We don't need a quarterback. We got a number 1 pick. We got a number 1 pick.
But you have a number 1, which you want to use to run around.
But we don't want to kill it. We don't want to kill the poor kid.
But you want to run on offense.
He's only human. Yeah. We need lots of things.
But you want him running around. You want an offensive.
Yeah. I love the kid. Yeah.
Why do you think people are so easily seduced into the desire of believing that something or someone outside of themselves is there's this, I'll call it the savior complex.
Yeah.
Whether it's a sports fan imagining the number 1 pick that turns the team around, or whether it's an investor of somebody relating to risk, believing that there's some other system or person that can turn around that can improve their finance, turn their losers into winners.
Okay.
Same as a P&L.
Yeah.
So you have a psychological profile that's basically primitive to human nature, in my opinion, which is a primitive desire to believe that there's some power or some expert somewhere who knows something more than you, who can help, whether it's in your sports team or whether it's with your money.
Okay, I'm accepting that premise.
That's a thesis I offer for discussion.
Okay.
At the same time, you have positioned decades of your life as a businessman and entrepreneur basically focused on telling people that certainly that the other systems of relating to money and the other people that claim to know more than money are lying to you, or it's an illusion at the very least, maybe not the malicious lying, but it's a incorrect conclusion, an incorrect interpretation of the way to solve the problem writ large, and that you can learn and you're your own hero.
Yeah.
You don't need a number one pick.
Yeah.
How do you fight the human desire not to have someone else help? I guess would be.
I don't think you're comparing apples to apples. That's why I think that's kind of a ridiculous premise. I mean, like, I don't think I can train you to beat a superstar basketball player. Like if I said, here's LeBron James and here's Dylan Radigan, and I think it's physically impossible if you spent the rest of your life trying to train to beat LeBron James. You can't. He's got different physical skills than you do when it comes to, first of all, you can't teach height. And second of all, there's certain physical skills. I mean, it's just a fact. Some people are more gifted athletes than others. And some people, it's not a desire at some point. It's actually physical. So
you made your point.
Okay. On the other hand, if you take some financial superstar, whoever that might be, and I don't even know if there is one, but I'll use a name that's recognized. Let's just take a Jamie Dimon, for example. Okay, he's a recognized name in finance. I'm not saying he's great or anything like that, just a recognized name, and makes $100 and something million a year. So we got to give him superstar status. And if I said, can you go heads up against him, as in a trading world, the answer would be, I think you'd destroy him. So I don't even understand how that's, again, apples to apples.
And I'm going to agree with you. Like, I'm not going to dispute this, but I'm going to suggest to you that while that may be logically and empirically demonstrably true, that the narrative, that the coercive nature of the narrative, that other people know better and that you can't beat the market, both, combined with a human desire, a human complex to want someone else to be able to have the answer, to admonish themselves of responsibility.
That's very different, but sure.
No, I recognize that it's very different, but I also think to have this discussion and ignore that is beneath us and beneath you as a man because of the complexity of your ability to think. So I think if you're not going to integrate that aspect, which I would argue is the most influential force, it makes this conversation less interesting because you have to have decided that you're not only going to say Jamie Dimon is not LeBron James, and I can take anybody with this toolkit and make them at least 50-50 to do better or worse than anybody else.
Sure.
But that's okay. Great. That's a math paper at University of Chicago.
Yeah.
And I congratulate you. But that's not what you did. You took that math paper, wherever it was done, on the back of a napkin and said, I'm going to make a business out of this. And I'm not afraid of the fact that the native content environment is one, and the complexity of the environment is one that's set up to encourage people to give up control and to stay low information and give up control. The whole system is designed for granny, grandpa, whoever the retail investor is, to remain relatively low information and give up control, either to the index fund or to an advisor.
Sure.
Your whole point is this is a disaster. Like where are the customer yachts going back forever? And you have a plan to show people how they can at least be fit to understand pot odds and maybe tilt the scale a little bit, all those things. But even once you've done that and it's perfectly, you still now have to interact with a customer, especially as you get bigger. At the beginning, you're always going to have wild men who are like, I got it, set me up. The first piece of growth is easy because you have an endemic population of maniacs who are like, I'm the man.
Sure,
that's your base. But now you're at a point where you're like, okay, I'm 10 years in, I'm growing. like I'm going to be more and more bumping against the endemic culture of risk avoidance and deference and hero complex. I believe Jamie Dimon is better than me. And even if he isn't better than me, I believe it, which then leads to decisions, which I think is very prevalent in the vast majority of the core of consumer finance.
Yeah.
How do you address that?
I actually think it's actually easy to address. Finance has been, the idea of investing, taking risk, building wealth, and all these things. This is, we're going back 100 years or longer, and over time, these large financial firms have learned how to very effectively annuitize the message, which means they've been able to create a very steady stream of revenue by convincing the consumer that they have better technology, they have better know-how, they have better access, and they're in a better
less risk than you would have without
they're
us.
in a better position to mitigate outlier risk and think all the above. Now, we know that, as technology continues to get better and better and better, and the rate that this transformation accelerates, which is what's happened in the last 2 decades, and it comes with, disruptive firms. It comes with disruptive technology, disruptive technology like the technology we've built, disruptive firms like, let's call it the Robin Hoods of the world. It comes with disruptive content like Tasty and many other places like that. And
but is it a losing battle against a primitive narrative that has limits to how much it can grow?
It's not a losing battle. It's at this point, it's an organic battle that struggles with that struggles to move at the speed of the technology. I think what you saw with the growth of, like, just as an example, with the growth of digital assets, is you saw the speed at which this movement, this transformation has the potential to grow. But you've got a lot of, it was like getting rid of large tobacco companies. It wasn't too dissimilar. It was changing a culture is extremely challenging. And especially in the world of finance, where people are, they're smart, but they're not necessarily clear of the domain. They don't have a lot of know-how with respect to the domain, and it's not taught.
And human psychology is stacked in Jack Bogle's favor, metaphorically.
Well,
don't worry about it. I got it.
There's an inherent conflict between financial media, which pays the bills through marketing and advertising from these same companies. So it's in their best interest. If you're CNBC, it's in your best interest to interview the Jack Bogles of the world time and time and time.
And promote their philosophy.
And promote their philosophy, of course, because they pay your bills. It's in their best interest. Tasty doesn't pay the bills. We're a little tiny piece to it. And so it's in their best interest to interview the Warren Buffetts, to interview the Jamie Dimons, to interview the Jack Bogles.
Cultivate the passive narrative.
Of course.
And defer resources to custodians who collect fees.
And that's been the inherent conflict over the course of decades. It's changing, but that's been the conflict. And then you have an absolutely disastrous regulatory environment. And I actually wrote about it this weekend, is that the regulators reach into the pockets of these same financial institutions that have essentially annuitized this conflict over the course of decades. And so the regulators that are the ones that are in a position to at least approve the changes don't, because they come from the exact same background And they're all ex-partners at JP Morgan, Morgan Stanley, Goldman Sachs, and BlackRock and everybody else. And so that's all they know. They're not smarter. They're not any more clear of the concept than anybody else. In fact, they're just living in some archaic, old, useless past. But that's what they know, and that's who they hire. So that's who you end up with at the Fed. That's who you end up at running the different regulators. That's why we end up with the Gary Genslers of the world, and it's a disaster. And that's what perpetuates this crazy myth.
Which both is your biggest opportunity and your biggest problem.
Exactly.
In my opinion.
I have been able to navigate in over the last 20 some odd years, been able to navigate the playing field so that we've been able to organically take advantage of what I feel is a great opportunity. It's worked out well. So no complaints. But again, we are, we're a fly in.
They call you a flea on a dog's ass.
Yeah, exactly. I mean, we're making a difference.
I mean, the whole sector, not even just you. No,
I understand. I mean, listen, we've grown the derivatives business. We've been a big part of it by tenfold in 20 years, maybe 20-fold in 20 years. But we're still we're a couple of percent of the notional. And so it's an incredible challenge that never gets any easier. And everybody gets their hair up. It's a standoff. And I mean, we're going to keep the battle, but that's why it's a very different game. Like we can all train to be the next LeBron or Michael or whatever it is. That can't happen because that's a physical thing. But the mental aspect of there's plenty of people smart enough to survive and flourish in the world of finance. Plenty. Millions.
Yeah.
Hundreds of millions. Tens of millions.
I think that's self-evident. I mean,
of course.
It's more, I'm just sort of thinking about, because I mean, I've been involved in a dialogue with you and others around you with this business in this sector for, many years now. And I'm reflecting on sort of my opinion of sort of large scale resistance to growth. And I think the biggest challenge is the psychology of, that someone else can help.
Listen, I mean, to go from 2% to 10% or 20%, because let's assume that this, not just you, but this whole world is right. And I'm assuming that because your math, you backed it up, right? So now you're really playing a marketing and a psychological game against a vested interest. We have witnessed in the last 20 years a complete transformation of a business that we didn't really understand, that we didn't really think could be transformed the way it was, which is technology. And there is no reason that with all the advances we've made in technology that we can't completely change the world of finance. Like, things move. We disrupt different businesses. I mean, even in sports, like, just as an example, mixed martial arts basically destroyed boxing. I mean, I know it's crazy to think, but boxing was, Red Holtzman once wrote that boxing was the purest of any sport ever created, because it's just one person against another person. It's as clean, it's as honest, it's as straightforward as you could have. And yet MMA comes around and just blows it out of the water. And we see that in lots of different industries and lots of different things, but no better example than in the world of technology over the last 2 decades. I think in finance, we're just early, and we're on our way. I mean, we've basically, shown we've created the trail map. We've laid it out, and we've opened the door just a smidgen, and now somebody else is going to come in and, or will help to do it, but they're going to change this whole industry. And in 10 or 20 years, it's going to be 35% passive and 65%, managed, just because that's what happens. Everybody's going to be pumping their own gas soon. Everybody's going to be buying their own airplane tickets. This is the future.
And again, the reason I'm skeptical is not because I disagree with you in your intentions, but the human hero complex, going back to my sport, and I recognize the difference between LeBron and Jamie Dimon, but I think that there's a psychological profile that exists in primitive humans.
But there's a psychological thing that exists everywhere.
Want someone else to be the savior complex. I mean, it's just
that's the reason religion exists.
So that's what I'm talking about here.
Yeah, when I first
the black magic is in the room. Okay,
when I first started doing some live shows, I used to use the example, like you're sitting in the stands watching a baseball game, and the announcer somehow says, "We're going to pick a person," and they pick your seat, and they say, "You know what? You can come down to the field and you can take any position you want." And you're looking at this, and there's a bunch of professional baseball players out there, and you're like, "Oh my God, I don't want to take one of these positions on the field. I'm going to be embarrassed. No matter what happens, I'm going to be embarrassed." So what do? You think about it for a second. You say, "You know what? I could be the manager. I can tell you when I need to put a reliever in. I can tell you I can pinch hit for somebody. I can say, hey, we should steal here. I can do that. I can't play the field. I can't hit. I can't catch, not like a pro, but I can be a manager for a couple of innings, and nobody will know." And over time, I think that that's essentially the battle that we're facing. That's what. We have to get people to.
I know.
Yeah.
That's why I sit here with some skepticism, despite your great accomplishments, because I believe in the power of black magic. I've seen it in other places. The voodoo is strong.
Well, you can't teach height. Like I said before, you can't teach height, but you
might not be able to reshape. You might not be able to reshape the unconscious parasympathetic nervous system either. Which wants a savior, which is why religion exists. Okay. Not height, but it's still a biological. I'm just,
So let me give you an example of why I don't think that's correct. So there is a massive, not notional, but there is a massive number of people that gamble on sports.
Which is the other side of the parasympathetic nervous system.
So there's a massive number of people that gamble on sports. There is no hero.
Not true. I see what you're saying. There's no one sports gambler who knows more than everybody else.
There's no Michael Jordan of sports gambling because it's mathematically impossible. There's no.
But I still get the entertainment of heroes by virtue.
Of course. But it's a level. It's a reasonably level playing field with a negative edge, which means nobody can ever be that hero because it's got an embedded negative edge. In the world of trading, in the world of investing, there is no negative edge because markets are too tight now. There used to be because just the commissions and size of the bid-ask differential, that stuff, it doesn't exist anymore. One penny wide, no commissions to trade stock. You can do whatever the hell you want. So there's no embedded edge anymore. There's no negative edge. So in the world of finance, it's going once the domain hurdle, the know-how hurdle is challenged and beaten, then the playing field is purely level. That's it. There's nothing else to it. That's why it has to be successful.
I listen. Logic. When you come here week in and week out, and you bludgeon me with your very well articulated logic, and it's lovely, and there's nothing wrong with it, but it is incomplete. It's not that there's an issue with the veracity, logic, or process engineering, or references for the very clear point of view that you articulate. It's that I worry that it omits primitive forces. I understand your point, which is primitive forces also drive participation, because exposure to risk and calculated risk is one of the most popular pastimes on the planet Earth, and always has been.
Of course, because
unlike that, this is better odds.
Right. And so what's the difference? The difference is that everybody believes that they have a certain amount of know-how, and they have an understanding of what they're betting on, and they also believe they have know-how because everybody's an armchair quarterback. Everybody's watched 8 million hockey games.
Everybody's a team owner. Everybody's a hedge fund manager.
It's the same. We all think we're the best. We're all.
Everybody's the big guy.
We're all blue horseshoe. Okay, that's it. But when it comes to finance, nobody thinks that because they're just not yet immersed. They're not well versed.
And that's where you and I have a meaningful disagreement. You say the reason they don't all think they're blue, like in sports gambling, everybody's blue horse show. On Wall Street, no one is blue. People. You say that's because they don't know. They don't understand that everybody. Okay, sure. But they also have been told, one, they're biologically predisposed with the savior complex to want to believe someone else will save them when it comes to money.
There's probably,
so that's a fact.
That's easy to change because you know what?
Let me finish. They're biologically predisposed through savior complex, and there's an organized multi-billion-dollar exploitation of that pre-existing condition of a predisposition to the savior complex that is an active global economy of media and financial services, reinforcing the very belief that they're predisposed to have without the activating content that is organized globally to put them into a narcotic of annuitization so that they can then not ever have to think about money ever again.
Yeah. I mean, that's the problem with financial media. Because nobody else can, they get paid to, if you want $10 million a year, if you want $10 million a year from Fidelity or 25 million, whatever the number is, $25 million a year from Fidelity, you better have the chief market strategist on from Fidelity and whoever else as many times as you can. And every other firm like that. That's just the way it is.
And so the only way that the self-managed world moves forward is on the backs of those who are on the other side of the parasympathetic system, not the savior complex people, but the I'm blue horseshoe people. And then, which we're saying every sports gambler is a blue horseshoe in their mind.
Yeah. And
you're just saying you two are blue horseshoe in this room, sir.
Well, I mean, I was just making a crazy,
you have equal odds to be right here as anybody else who walks into this room.
Without the negative drag. Sure.
But a little bit better room.
It's much better. It's not a little bit better. It's 100 times better. You're talking about the
mathematical odds are better, but the entertainment value is different.
Yeah.
I don't have physical heroes and all the things that sports offers.
Yeah.
I end up with people like Bill Ackman or Carl Icahn or Warren Buffett or Elaine Garzarelli or
everybody that
someone has to play the role.
You can't even begin to like. There's nothing likable about Bill Ackman. Nothing in the whole world. Nothing.
But the market still wants to position him, and he likes to position himself as a titan, as a figure of.
Of course, that's okay. Yeah, sure. Why not?
Saying that the sports naturally provides that. Who's the pick? Who's the guy? Who's the kid? Do you trade it?
Yeah,
whatever.
listen. It's it's
saying what's you get it.
It's funny too, though, that the athletes are, they're it's a short-lived existence. It's you're basically
hot and fast.
Yeah, you're basically capped. And then you're capped money wise. And then, look at these hedge fund guys that scarf $5 billion out of the system. And you're like,
a couple $100 million a month.
Yeah, it's insane.
People think it's a big deal that Ronaldo or whoever got a $240 million contract. You're like, yeah, I think so-and-so made that last week.
Yeah. And their contract's over 7 years, It's insane. I agree. Listen, you're preaching the choir. This is my.
But now it brings up a different topic, which is when you have an individual generating that level of an outsized income, it implies one of two things. Either one, that person is providing extraordinary value to the marketplace, and as a result, they're garnering extraordinary financial benefits because they're of a massive value contribution, which would be the most admirable and moral explanation for high degrees of income. Mm-hmm. Gates invented this, and now he has this, or whatever. It goes, never ends.
Yeah.
Or you're exploiting an inefficiency in illiquid or asymmetrical market, regulatory asymmetry, information asymmetry, technical asymmetry, something that you have figured out how to exploit, which is a temporary condition that is profitable.
That's interesting. It brings up a very interesting discussion that I didn't think we were getting there today, but it's one of the things that drives me crazy about the business is that there'll be somebody like, I'll give you an example, like a Bill Ackman, like a David Tepper, like one of these huge hedge fund guys that basically scarfs, $3, $5, $7 billion off
a year,
whatever, off the top of some hedge fund that's got 50, 15, 50, 100 investors, Stevie Cohn, the whole deal. They do nothing for me. They do nothing for you on any level. There's nothing there. This is just, it's a pure.
But what's the inefficiency if it's not a value contribution, i.e., Tom cured heart disease and now he's a rich guy, or Bill Gates?
No. It's a brilliant, for the few outliers that are able to pull that off, they're able to do it as just a percentage of the cap. It's a capital raise. That's all it is.
I know, but I think what's the inefficiency they're exploiting?
They're not. Why are they exploiting an inefficiency?
I'm making $7 billion a year and I'm contributing.
I didn't say you're making $7 billion. I said over a period of time you make $5 billion.
Yeah,
and
whatever the number.
You're not exploiting an inefficiency. You're taking you're monetizing your ability to sell, to raise capital. That's all it is. Just monetizing your ability to raise capital.
And the reason you have that ability to raise capital is because you have created the illusion of the savior complex.
But what I wanted to do, Dylan, was
narrative coercion.
Yes, but what I wanted to do was compare it to somebody like, and people are gonna hate me for this, but compare it to somebody like Ken Griffin.
Oh boy, call the New York Post. Call the New York Post.
I'll tell you
Tom
why.
Krasnoff defends the highest paid man on Wall Street and says he really creates value.
Because for the individual investor, and this could be, you could argue Jeff Yaz from Susquehanna, very similar, another billionaire. But what these guys have done, or to a certain extent, Tom Pettifree, when he was running Timber Hill, to a certain extent, what some of these people have done is they have, and I don't even like to use the term democratized, but what they've done is they've taken the markets. They've essentially disrupted the exchange marketplace and created a secondary marketplace so that everybody who wants to trade can trade for virtually nothing with penny-wide markets. So essentially, by creating a high-frequency market-making, complete massive infrastructure globally, what these few people have been able to do, and Ken Griffin better than anybody else, is make it so that hundreds of millions of people can actually trade derivative products. Because the old system didn't work. The exchange system didn't work. They have no innovation. They had no technology, nothing else. So what happens is along comes somebody who says, hey, we're doing it all wrong. I'm going to do it differently. And the whole system changes. Then everybody can trade. That's different. I don't mind the fact that he makes his, $10 billion because it's opened the door for 100 million people to trade. It bothers me more when somebody just skims $5 billion off the top of some hedge fund.
So I understand what you're saying, and I understand the distinction between what we'll call a more traditional hedge fund manager who's basically collecting rent from capital that they're good at raising.
Sure, exactly.
The high rent savior. Mm-hmm. Versus what we'll call a process engineer who's altered a system, in this case, the system of funding of the cost of buying and selling securities.
Yeah, I mean, you can make the same argument.
I got it.
But I can make the same argument for Jamie Dimon, who's basically just an operator, versus somebody like Jeff Bezos. You know, I can understand where Bezos and Musk, you know, they changed the world.
They operated. They had a vision for process engineering, a system that they implemented, and it worked, and it's remarkable.
That's right.
Which is different than someone who is just gatekeeping a service or a system.
Exactly, for $1 billion. Exactly.
Right. You're saying that you are admire and look to the process engineers with admiration and respect, whereas a little disgust for the ones who are just collecting money for.
I don't think it's disgust. I just think it's less admiration.
Okay. So I just want to make sure you feel understood before I tell you why I disagree with you.
Okay, go ahead. Tell me why you disagree.
I understand your point. I understand there's a process engineering crowd, Kenny and the boys, and then there's the big rent guys. I agree with you. I want to agree with you. Here's the issue. Because I saw this with Michael Bloomberg, who I would argue was the Ken Griffin of the bond market when in the 70s and early 80s, where he basically started disclosing to the bond market buy side markets and spreads and bonds that before you just had to take the salesman's from a tear sheet and Solomon Brothers say the bond is this, and there's no open outcry or discovery of any kind in pricing. My point is that repriced the entire debt market, just tightened bond market spreads. But Michael Bloomberg made billions of dollars by becoming the data platform that drove that process and then scaled it. Whether you're Michael Bloomberg or Ken Griffin, all the reasons to admire them, but I wonder, not for their money, but for their process engineering and success in implementing at scale, if the economic benefits then actually, instead of accruing to the customers that you herald, it's just all those spreads that used to be distributed to all the market makers and all the post traders on the exchange and all the market makers on the NASDAQ and all that jazz, that spread was taken from them and vacuumed up by Citadel, and that the customer's neutral to that event, that the customer's told this is better for you, better for the reasons that you say, but in reality, the process engineer, whether it's Griffin or Bloomberg or anybody, is actually just aggregating the efficiency and the collapsing spread through their process offering, which then just transfers instead of the spread disappearing, so to speak, and going back to the customer, the spread just, instead of being broken into a million pieces across floor traders and market makers, is accrued to a system that then pays back into Citadel or Bloomberg or whoever.
That's not accurate. That's not fair, because the difference is what Dylan Ratigan cares about and what Tom Sosnoff cares about is, what does that mean to me? And to me, it means that on one system, I can't even trade because the markets are so wide and inefficient. And on the other system, I can do anything I want for virtually zero. So,
but shouldn't the operation of that system be closer to that of a utility than a job that pays $10 billion a year? To have a working market?
I mean, you could argue. I mean, that's what we always felt was the exchange obligation, but exchanges decided, but then they all went public. And as they went public, it all became about how much money do you make? How much revenue do you make? So it went originally, I thought that's what exchanges, the purpose, but
for a utility, for liquidity.
They essentially were, but the problem with utilities there's no incentive for utilities to.
For excellence.
What?
For excellence.
That's right. And there's no incentive for innovation and creativity. So you have to, the wonderful thing about capitalism is it works when you create an incentive. So okay, I don't care what this guy, I don't care if he makes $1 billion a year. If every single market that I trade, and if I save $500,000 a year on all my trades.
Again, I'm not talking about caring. I'm just saying that it's sending a negative signal to the health of the system when you have that amount of money for what should be a utility.
I don't know if that's the case. I mean, was Jeff Bezos worth, $200 billion? Process
engineering, nothing pays more than successfully deployed avoid.
Of course, but was Elon's
Agreed.
genius worth $200 billion when Ken Griffith's genius is worth $6 billion? I don't know. His impacted more people than Elon's. That's for sure.
I understand, but I think that the fundamental thing is there's two versions of wealth, both privately and publicly. One related to value creation.
I know. I get it.
One related to harvesting.
Yeah, I get it. I'm just saying. I don't think that I don't. But that's why I don't think it's. I don't think it's a ridiculous number. Let's put it that way.
Okay. Well, listen, the most important thing is that Josh and the gang at tastylive start printing up the Tom Loves Ken bumper stickers.
I don't even think Ken would believe that.
I think we could put a Tom Loves Ken bumper sticker on your car.
And don't, let's be fair about this. It's my point is, in the world of finance, you were talking about people that actually
Value versus no value.
Yeah, that's right. And for me, that's, like there are people. And
I understand that entirely.
Yeah. And there are people in finance that, that create value for others. Like I think us at Tasty, and over the years, we've created incredible value for the industry.
And for the customers.
And for the customers. Have we been compensated? Of course. We have no complaints. It is what it is. And I think that's cool.
You're not just a rent-seeking model where there's other models that are entirely based on rent-seeking, as opposed to some form of performance, any kind of performance.
Sure.
Whether it's content performance, toolkit, educational performance, technical performance, or is it just, I create an emotional experience for you as your savior that makes you feel trust me with your $100 billion, and I'm your Pope. I give you emotional coverage in the darkness of hell at night. I cross the Hades for you, and you just leave this money with me and you'll be fine.
We all, like, as investors and as innovators, we all want to, that's the space that we want to go to. Like, we don't want those that get it through, we don't want to contribute to annuitized wealth. We want the good stuff. We want
we want the big guy with the voodoo, if we can find him.
As long as that voodoo helps us. Yeah.
Right. Which is Bernie Madoff or the emotional comfort of Bill Ackman.
Well, you can't compare Bernie Madoff because fraud is not something that you can.
No one can compete with that kind. No one can compete with that kind of voodoo.
Yeah, right. Fraud is like, fraud puts you in a completely different world. Like a
financial serial killer. It's more like a murderer than a businessman.
Yeah. The reason people commit fraud usually is because, at some point in the process, they screwed up. Very few people in financial fraud, very few people start out. Like, I don't think Sam Bankman-Fried started out thinking this is going to be a scam. But you and I don't think Bernie Madoff did either. But, it just happens along the way. You just get yourself, you get in too deep.
They make movies about these moments at 2 a.m. when you could either call the cops and turn yourself in, or call the IRS, or call your clients, or lie to everybody. And they're like, Chachi Rodriguez under the dark of night he had to lie. He couldn't do it.
Yeah, that's exactly it. All right. That's an interesting discussion today. I didn't think you were going there.
Broken soul problem. Now you're talking about the problem of a broken soul. Under pressure, they can't handle it.
The old broken soul problem.
Listen, the broken souls are good candidates for the savior people. They go well together.
I think that's a new term we can coin, the savior people.
The savior people, that's your number one enemy. You're up against the savior people with your mad mission here. I hate to tell you. That's your next time you go to an IG board meeting. Be like, listen, okay, interest rates great, darts great, tech great, good. What about the black magic savior people? I want to be invited for that. Just that one discussion. Tell management. I'm ready. I'm standing by.
He's Dylan Radigan. I'm Tom Sosnoff. This is Truth or Skepticism. We do this every Wednesday at 1 p.m. Central Time. Dylan, talk to you next week.
A pleasure as always. Thanks for the time.